Back in the day, I used to work at TD Ameritrade, and it was probably one of the worst jobs I ever had. I was on the trade desk there, and so people call in with trades and then ask for, how do I do this setup? And I explain the setup, even if I thought the trade was a horrendous idea. And when you work a job like that, you do, at times, not frequently, but occasionally, run into these really high baller traders, people that are operating with millions of dollars, and I could see the performance, I could see the trades they take it, I could see the money they're printing, and it was just blowing my mind. At the time, I was a successful trader. I was making money, and I had taken the job actually because in my head it was like an intro into finance. Build up a resume of experience within the industry and get some licenses, because it was actually a huge pay cut for me to take that job. But I was so motivated to try and do anything I could to get my foot into the door of a hedge fund to be a fund manager, because I was like, oh, I'm good at this. And that working that job and interacting with my peers and kind of just testing their knowledge base through simple conversations, I started to realize that I was significantly better than everyone I worked with. In fact, there were people who worked that job who thought that trading was not possible, despite the interactions that are inherent in the job where you're talking to people and you're seeing their accounts and you know that there's not a lot, but there's definitely people who are just absolutely printing hundreds of thousands of millions of dollars on the market and taking huge bets and paying huge on them. And little illegal. I don't know if they do this now, because this was before the Schwab buyout, for before the restructuring and everything. They used to have secret Slack channels with people who were sharing their trades within the company, which you're not supposed to do, but they did do. And I eventually got added into one of these Slack channels, which was probably more in a gray area than outright illegal. But it wasn't something like the corporate, higher ups knew about. And I would just read through this, and it was like reading through a dumber version of Wall Street Bets, because a lot of these people didn't have a lot of money and they would just burn money on their feels. Like, I feel like, and there's no process being taken. There was no risk management being discussed. There was no even real analysis. It was a joke. I mean, and I was reading this and I was like, I got to get out of here. The culture was also just abysmal. It was one of those companies, it was kind of the antithesis of corporate sludge, where there's like, we have all these processes and the ways that we do things. And even though that there's very clearly better ways to do things, you would ask and they would just tell you like, oh, this is just the way we've always done it. And a response like that murders my soul. I did not last long. But I wanted to kind of clarify that, trading isn't as simple as looking at these and when they play, you just take them, or that you'll play them and they'll just immediately print, that there won't be some sort of retracement. The market moves in ebbs and flows, right? There's a lot of nuances between each position, and lots of stocks also have their own personalities that you can kind of feel out through experience on how they like to operate. Now, oftentimes I talk to people and they take these trades, and it's a horrible spiral effect that can occur, right? Where you take this setup on the stock has a retracement, it has a breakdown, and since you aren't using a process, since you don't have a stop at a pivotal technical break, you cut the position because it's losing, without really looking at without really analyzing the chart, or because you have no process, and then it reverses, plays out, ends up printing money. And so you get the double whammy of, I just lost a trade and the trade played out. And then it's a quick process to spiral into a bunch of losing trades after that, because then your emotions just take control. Sucks. But a way to avoid that, for instance, very recently we had a Rumble trade that went down like 40%. Now, this trade I told members was an A plus trade. I took a very large position in this trade, although it had a very wide stop. Typically, if something, when you look at the chart and you set up your stops, you can do the math. You could see what you'll lose on the option position if you actually achieve your stop. So for Rumble, it was like a 70% loss if we actually achieve the stop. But I still took, and typically for that type of trade, you would take a smaller position, right? Because the loss can be so exceptional, right? If you have a setup and your stop is only a 15% loss, you might be able to put a little bit more into that trade. because your stop isn't as brutal as other trades, right? You might have a better risk reward there, depending on what sorts of targets you have, what catalysts you have, what the market environment is like, what your relative volume is like, right? All of this plays into the setup for the trade. And on the Rumble trade, we had like good market alignment, we had exceptionally strong relative volume, and we also had multiple great catalysts. So I was looking at that trade as different, but atypical. I was looking at it as like, this is an A setup, and even though I have a really wide stop, I could take a really large position. That trade ended up going 43% into the red. That's a point at which a lot of people would cut the trade and it wouldn't play out. I held the trade because of the great setup that I foresaw on it, and ended up paying huge. It ended up being a big winner last week. Understanding these key factors is really how you're going to really get that total account growth that you want. All right. Having a process, even one as simple as this, although it is not a full encompassing, it's just marketing, right? These are just marketing. It's not like all the work and effort and the execution involved with actually taking the trade. It's more just like, these are the setups. All right. We do all the other stuff in the Discord, and I sometimes break it down on YouTube, maybe not to the level that I do within the community, but it's a nice starter. It's better than I feel like. Okay. If you're using the phrase, I feel like, before you take a trade, you better be cautious, because emotions are little demons trying to take your money. Anyways, let's break this down. So let's talk about Tesla. I think Tesla has completed a 5-wave pattern on the 1-hour chart here, and I'm looking for an ABC retracement to the downside. So ABCs love to usually retrace to 1, which puts this at about 397. That'd be right about there. So we got this would be, just for clarification and the visual, that would look something like A, B, C to the downside. C waves are the strongest to play, but I think just heading into the new year, what would likely be some profit taking or some rebalancing. Tesla has grown so much, I wouldn't be surprised if a lot of the traders start to get out of the position and we see a retracement down to 395. There is also potential that we get an even deeper retracement than that. We could get the 1.618 extension to the downside, which would bring us maybe to like 360 to the downside. Again, this is probably where I buy back a little bit, potentially, or even if we trace down to the 356. It's all going to depend on what the broader market looks like and what's going on for Tesla. What kind of catalyst we see coming in the future. I will say we're clearly bearish on several different time frames here, and the weekly is getting to an overbought level, although Tesla can get much more overbought than this. It can go a lot higher. So if the bull trend continues into next year, I might continue doing some selling and sizing down on what is still a very large position in my account, although I am kind of hitting a point where I have a lot of cash. So that'll be something we talk about on our daily predictions video, how I plan on deploying some of that money. We look at AVGO. We have a very clear bullish trend, huge breakout, huge relative volume confirmation here. We had a great reset on the RSI for a nice bounce that paid well last week, and we had I was like this like large like $8 gap up. Right here was like a nice like 136%. We then got a continuation there. Then we got the big retracement on Friday, but they defended the EMAs, which gives me an indication that we might still get a nice breakthrough of what is kind of like a double top. Not truly if we go like to the regular trading hours. We can see it's just one little top there, but it looks like we hit the nice retracement. We're getting the confirmation. Markets don't move in straight lines. They move in waves. This looks like a very healthy wave back up. So if we can break above the 247.32, I think we can buy some 250s. I think we can roll those even to the 260s and look for some all-time highs here if the market continues to be strong. Now, if the market doesn't hold, we get bearish. I would like some puts under Friday's lows. I think it'll take you right down to this chop top range, you can hunt for like 586 to the 584 range. Below 581, I think, is a nice level to actually hunt for, even a bit lower, down to like 576. I will say your ultimate bearish confirmation is below the 568, at which point I think you start hunting for the 100-day EMA. Let's get that chart up here so you can see what that looks like. And the last setup I want to talk about is Meta. Meta has this like great repeated cup and handles it's been forming recently, and we got another one. It also showed the most relative strength into the close on Friday, which was like the first notable bounce that we got on Friday. We get this normal like retracement, sells off again, but then you get this strong real high volume buying into the close, which is great for the bears, or the bulls, to see rather, coming into this week. However, it's important to remember that really relatively we're still in this like very large chop range. There's also a ton of movement being priced into this week, so be ready. There's like a 100-point move being priced into the SPIX, which is a 10-point range set into the SPY. So we could see a massive one-sided move, or we could see that we just trade up and down in this range with volatility picking up substantially. Volatility is a little bit higher than normal, but it has come down substantially since that first sell-off we got post the FOMC. And so I'm looking for maybe some VIX longs if it could come down a little bit more and the market gets one-sided and goes for a squeeze to the upside, and playing Meta to the upside at the same time, kind of buying my hedge while it's cheap into the rally, but also riding the rally to the upside and playing the trends. That's what I'm looking for this week. We'll have a lot more commentary and a lot more videos coming out for the next 2 weeks as well, including my yearly predictions. Hope you enjoyed, hope you found this helpful, and God bless.